Hey everyone, welcome back to what's happening in real estate this week. I've got myself, Rob Golfi with REMAX Escarpment, the Golfi team, and we got Conrad Zurini, REMAX Escarpment Niagara, and REMAX Escarpment, and broker owner. And we got Brian Hogben, Mission 35 Mortgages. Looks like he's showing off his new haircut, which is awesome. It looks good.
Happens once every 6 months. It's good.
That's it. That's it. So, guys, in the paper, you probably saw this. It says Canadian mortgage delinquency rate falls for the first time in 3 years. What the heck is that about, Brian?
Well, it's again, I don't think it's huge news right now because this delinquency rate too, it really refers to mortgage maturities, right? People coming up for maturity at a higher interest rate than what it is. Okay. And there's a lot of fear around, oh my God, interest rates are so much higher than what they were. And they are higher, but you got to boil it down to the numbers. The delinquency rate for this, number one, it's A lenders. This doesn't include the private lenders. That's the market that everybody's talking about. Doesn't include investors because investors aren't insured with Canada Mortgage and Housing either. Yeah. So, and I did a quick number because I think this is important for people to know, right? Because if you had a mortgage of $750,000, you bought 5 years ago, and you had a fixed rate of about 2.3%. Awesome. Number one, guess how much principal you paid off? Even though your house is probably worth less, guess how much principal you paid off in 5 years? $122,000.
Yeah. Wow.
So much is going towards principal.
Yeah.
That, right. So even if your house is worth less, right, you paid off a shit ton. Number two, you are allowed to. So even if you can't refinance, you're allowed to. If I took a 25-year AM and I'm down to 20 without any requalification, not a lot of banks will allow you to go back up to 25. They won't let you go to 30. But they'll let you go back up to the original amortization.
Right.
Guess what your payment changes by in today's market, going from a 2.35 with the principal pay down to a rate of, let's say, 3.95, 4% on a variable.
Right. Yeah. Right.
You know what? You know what the crazy thing is? Your payment's actually $15 fucking cheaper.
No shit.
Cheaper now.
Cheaper,
right?
yeah.
And that's like, so this
you're taking the equity. You took off the equity. Yeah, the equity.
Yeah, because now my mortgage is shrink from $750 down to $628.
Yeah, which is fantastic.
So now, if I just add on the 5 years I paid off, my payment's cheaper by $14.
Yeah, but everybody spent lots of money over the 5 years. Now they need the money.
Wow.
Yeah.
That is a different conversation. That's
their house is a cash machine. But no, you're absolutely right. I think that's the point that everybody is missing in this whole equation. You're absolutely right. It's awesome. So they got a great opportunity to pay down a lot of debt. Yeah.
That's awesome. So people don't have to fear about having to sell. People don't have to fear, about things are going to be tough for them. Basically, they'll be able to pay the same rate as they've been paying, but yes, it's a 5 year more, but it softens the blow. They get to stay where they are. They get to continue going on. But
I think this is where the fear in the marketplace is on the private side, right?
But
who leveraged up too much, they took aggressive mortgages, or an investor who leveraged up too much. But that number is never really captured very well, in my opinion, in these delinquencies.
But the delinquency too, though, you got to remember too, the banks are working with people. They don't want to take it. So they're working with people like 6 months, 8 months. The only time I've heard anecdotally when they pull the plug is if you lose your job in the interim, like in this period of time where you're, I need more time and, I'm kind of just trying to get ends meet. That they're carrying you for 6-7 months.
And the banks know you got no chance.
Right?
The banks know you got no chance.
Banks are up, they are so forgiving, because the reality is in the private mortgage market, I can go power sale if I'm a private mortgage, the lender. I can go power sale and start the process in 14 days. The banks, 30 days, you didn't make your payment. Hey, Brian, is everything okay? No. 60 days later, hey, Brian, it's been 60 days. And I think, to Conrad's point, they really are communicative. But if you don't, if you hide under the covers and don't do anything, then they're like, okay, we'll go for court press and take your house because we gave you 90 days to communicate with us and you didn't. Right? You got to really avoid that problem, because to your point, banks do want to work with you. They don't want to take your house. They don't want to put it up for sale. They'd rather have you pay it.
Yeah, no, exactly. And you're right. Yeah, they will carry you for both. I think by the third month, I think the letters start coming if you're not communicating with them. But if you're working with them and you're trying and they see that, like, I mean, it's not like it was 30, 40 years ago where, they like the 90s. I mean, I think there was no communication. They just took it. They just said, sorry,
you're right.
You gotta be out. But they're definitely got more morals now. And we're in a
there's
different stage
now. They don't want to get the bad PR, right?
No,
like,
there was no social media back then.
You're right.
The bank never looks good taking somebody's house, right? Never look good.
No.
So.
But so there was a case, a corporation. I'm not sure, Conrad. I'm not sure if you know. Like billions. They own plazas and everything. Did you read about that yet?
No, I haven't. No.
There was a company. I can't remember. I wish I had that. It had nothing to do with what we were talking about, but it just brought to my thoughts. Is that like a lot of companies out there, they're hurting right now. Even like the risk takers. They're going through, like you probably see it because you know more of those guys that the high guys that the developers, the builders, all those guys. Are they talking like shit?
Oh yeah, they're selling. They're selling projects that that. So let's say they owned a plaza or something that they were going to redevelop. They're now selling off some of those assets. They're going to private equity. And you got to remember too, like when they talk about these 40 projects or 45 projects in 2025 that got canceled, I would say 30 to 50% went bankrupt, because what they do is they create a corporation for that piece of land, right? And if there's financing against it, and if the banks really didn't do all their tying up all kinds of other properties, they just pull the plug, go bankrupt, and the bank's got to resell the parcel. So so that you got to think about. It's about 30% of the projects I think went bankrupt completely. Wow. They over leveraged the land. And the other thing that's happening too is a lot of guys bought in 2021 like drunken sailors, like from farmers and from people. And a lot of that and it's usually a 5-year mortgage, and a lot of times it's 5 years interest only. Right?
Yes,
5 years.
Yes.
And so now, this is when you're going to see those pieces come to life. And already we're seeing people trying to sell them. They've been trying to sell them for the last year, but they might run out of runway because the farmer or whoever says, hey, the 5 years is up. I ain't renewing it. And all that money you got in, and I'm going to take it and resell it. Or you gotta refinance and pay me my money. So that's going to be a funny time too. It's going to be interesting where some parcels of land and some developments that were slated to go by now, right, are in jeopardy.
Are we going to hear more stories next year, you think, about all this stuff that's happening? You think?
100%. Because a lot of that buying, a lot of those acquisitions were bought in 2021. These guys were like, they went out shopping.
Yeah. I think everybody was. I think everybody was buying like crazy.
I think in the finance world, people in the finance world became cowboys too, because the number one defaulting product that I see right now is the balloon mortgage. Everybody thought, no problem. It wasn't just interest only. It was, hey, I'll capitalize the payments. And I'm sure that probably happened in your world too, Conrad, with some of those farmers and that, where it's like, I'll hold the debt, but not only will I hold it, I'll add the payments onto it so you don't have to make any payments. In the residential side right now, those are the worst performing ones that I've seen, because nobody budgets for a payment they're not paying. Nobody does, unfortunately.
No kidding. On another note, so I find that sellers, they are doing the blame game. So we have two properties that we were selling. We sold one. We did very well on it, and I think the timing on it was and they got close to 800,000, 776,000 or whatever, right? And they did very well on it. It sold fairly quick and everything. Quick closing, 2 weeks. It was a flip. So the sellers, were ecstatic, right? So now we sell the next door neighbor's house because they own two of them beside each other. And our suggestion was to list it under 700,000. And they go, no way. It's, we got this next door. And I says, well, my gut feeling is that this person that gave you the money for this house needed a quick closing. There was no other choices best on the market. You happen to show up on the market at the right time, and all the moons lined up for you.
Yeah.
Because there's no other comparable. There's nothing that house is an anomaly. So anyway, I had a discussion with him, and I said, look, I went far, and I looked around. You're 100,000 overpriced right now. And he goes, why didn't you tell us that? I says, we did. I says, we did. You didn't want to listen. I says, we told you many times that you're overpriced. And I'm showing him on the screen, like on Zoom, sharing the screen and everything. And he's accepting it. But it's funny how they won't listen at the beginning, but then
I know.
Then after we've gone through this, and I said, listen, if we either have to mutually apart, just part ways, and just go, or if you don't do the $100,000 price reduction. I says, it's not going to happen. I says, we're in a price sensitive market so badly now. And I've got clients that they wanted a high price up here. And over a course, we got clients that over a course of 9 months, the market's dropped this, and every time we get an offer, it wasn't good enough. And then the next 3 months, we get another one. They just keep refusing it. And now they're saying we should have took that one 3 months ago. We should have took that one 6 months ago.
I think it's because we see this in our place too, Rob. And I would say that's why you got to work with your team, with a great realtor, because I also think there's realtors out there that are kind of like the hope strategy, hey, I think it should be 100 grand less, but let's give it a go. Let's give it a try. And maybe we'll do it. But it's I think having that tough conversation up front, what you're saying is what needs to happen. And if the clients aren't having that, it's a problem.
And they're holding on to a price, again, sometimes even the agents do some comparables. And if your comparable is higher than the house, then they latch on. I think consumer sellers, so we're a little bit to blame, but you know what? It's funny. Very good friends of mine. They're seniors, and we played a game the other day, and they said, we're thinking of selling, or we're going to stay here, or whatever. So I did it. I said, okay, on a piece of paper. I had a fun time with them. Hey, you give me your price, husband. I said, I'm not even going to say my price. Write it down on a piece of paper so we all trust each other, right? Like this. Yeah. Anyway, I'll tell you, the funniest thing was the wife was a little lower. The husband was way high, and I was slightly higher than the wife. Wow. Right? See? But what happened? They went with the high price of the husband.
See, that's the way it goes.
There you go. They didn't care about me and his wife, right? You know what I mean, right? But anyway, so
it always happens. Always happens.
And it's in another market. It's not in this market. So there's an agent in Toronto handling it. But so funny. It was so funny. And even the agent looked around and said, Conrad, I can't even believe it. And he says, we're going to probably be close to what you said too, very shortly. But then I don't know if it's enough, because the market's a little funny. But I will tell you this, and I'm going to do my video about this. This is where it's very interesting. I don't know if you notice this. In Canada-wide, not in Ontario, but Canada-wide, it's never been 6 consecutive month-over-month increases in unit sales. So from April, so you got to understand, April, we've increased units every month until this month. As a matter of, and we are over September. Usually September does a little bit better than October.
Yeah.
But that's fascinating. We've never seen 6 consecutive months across the country where we've seen it each month go up and up and up from April. So April, May, and then June, then July, and then August, and then September and October, all a nice little straight line month over month, which is fascinating. Now, we're down from last October, but that's an interesting sign of things. And I think we're going to see, and maybe you're seeing it too, Rob, we're going to see a very robust November, I think. I think November is going to outsell October. That's my prediction.
I think you're right. Because I look at my numbers every day and noticing that that our numbers are pretty good for at this day, like today versus last month. Like I watch them every single day. So I do think that, but the numbers are becoming strong. It's just the prices are still flatlining. That's it.
Oh yeah. And the other thing to remember, and I tell people all the time, because we can only do it in Hamilton because the other boards don't let you do it because we have cumulative days on market. But I've done cumulative days on market. And if you're over 30 days on the market, okay, you get 91% of asking.
Wow.
So think about it, right? 30 plus. Yeah. So
over 30 days on the market. 30 days,
by the time you sell, you're at 91% of asking. So if you start at $1 million, right, you're going to get 910,000. If you would have went at like 929 or 939 or something like that, you probably could have got closer to because 30 days or less, you're getting 98.5% of asking.
Right.
You see, so 949, 9-ish, right, would have done it. And if you were 899, you could have seen it, much earlier. But you're going to get the same price or a little bit better if you price it with precision than you are dragging it on. And that's an average 91% of asking. Some people are getting like 80-something%, of asking.
Wow.
30 plus days.
And you're getting these stats from the Hamilton.
Yeah, and only Hamilton, because Hamilton has cumulative days on market. So you want to see the cumulative days on market, right? Yeah. And that's what's telling us that they're getting way lower than the people that are selling within a short period of time. And I'll tell you, detached homes in Toronto, it's like a record, 17 days on the market.
So basically, those numbers work everywhere. It doesn't just have to be Hamilton. Like they work in Niagara, everywhere.
Yeah, we can't see the original price. You'd have to really do a lot of work. Yeah. But we're fighting. We're fighting to get it back in Niagara and stuff to get the cumulative days, because that is such a great measurement.
Why they take that out? Like what's wrong?
I have no idea. You can't even get months of supply in some areas. No, it's terrible.
You can't get it.
It's really bad.
It is terrible. It is terrible.
And it's hard. And you know what? Then the consumer can't make the right choices, and we can't advise our customers, right? Our sellers, right?
Decision making tool right there. Like if I know it's been listed for 60 days, it's going to drive my decision.
Oh, absolutely.
Oh, totally. Absolutely.
Yeah. And the seller may, say, you know what, they look at these numbers and say, you know what, we got to follow your instructions and list at the right price. Yeah, absolutely.
Totally. Yeah,
absolutely. Guys, I appreciate your time. And if you're listening, another sale.
Yeah, there it is.
Another sale. And I appreciate your time. Follow us on all social media aspects and YouTube, and we'll see you next week. Thanks for listening.
Thank you. Thanks, Rob.